how to start private lending. That means how do you become the bank? So we're going to talk through how that actually happens and put some protections around it so you can get started in being the bank and giving out your first loan. So we're going to talk specifically what is private lending and why most people miss even doing it and don't do it. And it's surprising to me because it happens everywhere. When you actually go to real estate groups, real estate people have been doing loans and to each other for years, decades. It's been so around, but it seems like the real estate community is the only one who's really caught wind of it. Second thing we're going to talk about is a step-by-step process for you to do your first private loan. And number 3, how do you scale private lending into an income stream that is secure for you and your family? So first, let's talk about what private lending is. I'm going to read you the definition. So private lending means you are lending your capital to borrowers. Typical real estate investors and small business owners have usually a fixed interest rate secured by collateral. Typically, you want to be in first position if it's real estate, so you're actually going to hold the note. I'm actually a private lender on a piece of equipment, big construction equipment, where I hold the pink paper, and until it's paid off, I will own title to that piece of equipment. So ideally, in a lending situation, as long as you've done the loans right, it can be an income stream. So say you start with, $50,000 and then you do $100,000 and then you do another $100,000. Now, first of all, you need to come up with where you're going to source that capital. Either you have it yourself or you can source it at a cheaper rate and then arbitrage the debt. That gets a little trickier and a little riskier in my opinion. But let's walk it through. Again, private lending is the practice of you lending your money. Typically, it's 8 to 12% in today's environment. Some hard money lenders and private lenders are up to 14 and 16% because money's just overall more expensive. When interest rates for home mortgages were down in the 2 and 3s, 8 to 12 felt good. Now that home mortgages are in the 6s, some of the folks that I know that have done private lending and hard money lending, they're in the 14, 16%, depending on the state and the usury laws in that state. So again, you're going to secure the loan by either the deed of trust, the actual mortgage. So you're going to hold the note. You're going to be the bank or a portion of the bank. Now that's where it gets tricky. If you're just like 100 of $1 million that they need, you're going to get 10% of that. There's other ways, more advanced ways that lawyers can help you put that document together to secure it that way, where basically you'd all be together and own a tenth. There are some states that absolutely don't allow it. I know, for example, does allow it. It's called a split deed of trust. It totally depends. To check it out quickly, just call your title company and see if they'll do split title, say 2 or 3 or 4 different lenders. Banks have been doing private lending for centuries. So basically, it's just flipping it and letting you be the bank. The other place that people can do private lending and do a lot of private lending that I've seen is in the whole life insurance community, where people have huge life insurance policies and they want to make more than they're making inside the policy. They can actually be the bank, be the lender, and lend to borrowers. Now, the risk of that is if they don't pay you back, you've hit the death benefit against your policy. But there's a lot of ways to get that kind of money. You could also lend it out. I know private lenders who just use their huge IRA. They work somewhere for 20 years. They have $1 million, $2 million IRA, and they actually are the lender and they're the bank from that. Step by step, I'm actually read the steps off. So get a pen and paper for those of you who step by step want to do your first loan properly. So number 1, where's your lending capital? All right. Are you going to use it from your savings, your IRA, your life insurance policy, your own savings or capital accounts? Number 2, you got to find your first borrower. And then what is the project? Are you going to borrow into real estate? Like I've done construction equipment, like I've just told you. Are you going to do a retail store? I've had retail stores borrow against their AR. So as they start making payments, they maybe get 10% of every payment received until the loan's paid back. You can get creative. Always use a lawyer on these documents, especially if you aren't very familiar with the individual that you're actually doing the loan with. Number 4, you want to document it with the proper promissory note or the deed of trust if you're going to use that. And if you really want to, you can fund the loan through escrow. I don't see a lot of that done, depending on the project, if it's a big commercial project. But then we're talking typically big hard money or private equity lenders. If you're actually going to go through escrow, are you really going to go through a whole escrow process for $25,000, $50,000, $75,000? Up to you, but it is an option to make sure you secure it because then it's recorded at the county level and debt will always trump equity. So if anything happens to the project, your debt would be in first position. So before I finish and tell you how to scale, I want you here on my channel, I want you to click that notification button be here 5 days a week and use our playlist. Go up and like search for anything real estate related. You can look for private lending. You can look at how to use a promissory note. There's a lot of information on this channel. I've been out here for years. And get your kids listening to the channel sooner than later. They're going to absorb all of this and they're going to start talking. What I love is when the kids start talking in your household about things they've learned or concepts they've heard here on the YouTube channel, forcing you, the parents, to come along for this conversation. Now, how do you actually scale into private lending? You start finding a whole bunch of people that either want to loan, and you got to put a fund together of money of other people. You can put a fund together around IRAs. So again, have a lawyer construct that document. So you want to find the lenders and you want to have them at, say, a 6, 7, 8% rate. And then that fund, you need to find a bunch of borrowers. So you're basically finding the lenders and the borrowers and you're arbitraging in between. And you're making sure that the notes and the real estate and the deeds of trust are actually recorded. So I have a friend in North Carolina who does this all the time. He has access to millions and millions and millions of money at a very much cheaper rate. And then they loan it out at, say, 10, 12, 15, 18%. And they make the spread. It's called an arbitrage. So you can scale it. You don't have to make all the money, but you better find the projects that are secured, because if you're standing in the middle of the lender and the borrower and you're not in control of that project, the whole house of cards could collapse and you're the one signing the notes. So if this is interesting to you, make sure you lean in. I'm going to give you 3 chapters of my wealth cycle book and really start understanding alternative investing. And if you have a question, go to askloral.com, ASKLORAL, ask a question, make a request. We'll be back tomorrow.